What is commercial real estate, and is it the right investment for you? Commercial real estate can provide some of the highest returns available in the market, but what is involved in direct ownership and how can you make your first deal happen? Commercial real estate, very generally, is a business. You're in the business of leasing out land to other users in return for rent. The main asset classes are multifamily, office, retail, industrial or warehouse, and land. In addition, it's key that you put the team into place on your next deal. That includes an accountant, your lawyer, your lender, your broker, and your property manager. Another big difference for commercial real estate is in the underwriting and the acquisition process. Financing a property is much more critical than on the residential side. Therefore, the lender becomes a critical component of satisfying their requirements if they're putting significant capital for the purchase price. And for commercial real estate, looking at the existing income or potential income requires a complicated analysis. In addition, there may also be three primary methods of valuation that the lender should use, and you may also adopt as well. There's the income approach, there's the sales comparable approach, and the replacement cost approach. Finally, we're going to talk about closing a transaction and how to operate this property until you get to your exit and weighing the opportunities for forced rent versus appreciation. Finally, you need to determine your own goals and determine if commercial real estate is a fit for you. Let's talk about asset types. When you're doing your analysis and determining how to start in commercial real estate or what asset type to start in, multifamily is one of the most common to start. Multifamily is comfortable for a lot of new investors for a lot of reasons. It has a lot of similarities to a residential property, but its scale allows you to do more things and make this more of a passive investment. Now, what I usually suggest for first-time investors is to find a property that generally has at least 50 to 75 or maybe 80 units where you can support a full-time on-site employee. That's a key distinction between some of the smaller multifamily that don't have enough revenue or net income to support a full-time on-site. And if you don't have full-time on-site management, it really changes the dynamic and the time requirements of managing such a property. Let's talk about office. Office has undergone a lot of changes in the last couple years, but it's still going to be around for the future. Generally, office leases are longer terms. They are used by businesses to have meeting places and allow a collaborative environment. Office can be really good for people looking for opportunity in a underserved market, or especially a building that has a lower vacancy due to various factors outside of our control. If you're willing to make these changes and implement them, office presents a great opportunity. Hotel, motel, anything that's in the hospitality business, you basically look at the average revenue per night and you analyze what you can do to increase that revenue, that RevPAR. Retail. This is any type of facility like a shopping center where people come to visit in person and purchase goods and services. Retail presents another opportunity if there is a building or a specific asset with lower occupancy. There is an opportunity to increase rents and increase occupancy. Industrial warehouse. These have been very popular for a long time now. With the rise of e-commerce, we're really seeing a lot of demand for industrial product. If you can manage this type of tenant, which tends to be a low demand user, there are really strong opportunities in the industrial segment. Finally, land. Land is an investment. Some people say it's the greatest investment because they're not making any more of it. However, land is typically not cash flowing. There are some exceptions for what we consider a covered land play, which would be something like a parking lot or another low rent use. But if there is cash flow coming in that covers the annual expenses of a property, we would call that a covered land play, where ultimately you can sell down the road for a development opportunity, whether you self-develop or you sell to another developer. Let's talk about your team. When you're engaging in a commercial real estate transaction, it's imperative that you put together a team to help you analyze and underwrite the property. First, I recommend an accountant. The CPA is going to be able to advise you on different structures and what the tax consequences are going to be. In the United States, owning real estate is one of the most tax advantaged investments that you can make. You can easily have positive cash flow every year and have a net operating loss or a net taxable loss. Therefore, your relationship with your accountant is critical. Next, your lawyer. Beyond plugging for myself, I think it's a critical part of your team to analyze all of the contracts that you're signing, reviewing the leases, the title, the survey, loan documents, any piece of paper that you're signing. It is important to have your lawyer review that so that you understand what you're signing. The property manager. This person is responsible for managing the day-to-day operations. They may collect rent, they may field maintenance requests, and they're a critical component to your team in order to manage the day-to-day and allow you as an owner to have a passive role in the property. Your lender. This is a critical part. If you have financing, they can provide some or most of your financing for the acquisition. Therefore, it's important to find a lender not just on interest rate, not just on price, but truly finding a relationship that can grow with you and fits your goals as an owner. A piece of advice that I love to give is find the smallest lender who can do your deal size. So what I mean by that is if you have a $10 million loan, you may not be able to go to a credit union. You may need a regional bank. But if you have a $3 million loan, I would find the smallest lender that can professionally provide your services. And that credit union may or may not be the right fit, but find the smallest one that you can. Finally, your broker. They are a critical piece of this transaction because they're responsible for knowing the market, they know market pricing, and they know the tenants. They know what the demand is in the area, and they're a critical component of your team. On a commercial real estate property, it's really important to understand how to underwrite and analyze the existing property's cash flow before you make an offer on a commercial property. What this means is you must look at the P&L, the profit and loss provided by the seller, and understand how you value and analyze the existing cash flow on the property. In addition, you're going to have to convince your lender that the valuation that you see is similar to what they see in order for them to approve the loan. And again, this is very different from the residential side where they may only be dealing with comparable sales or a replacement cost, and banks are more willing to lend on residential properties without providing this same level of strict underwriting. So let's talk a little bit about the three valuation methods. When you order an appraisal, they're typically going to provide all three of these measurements. And there is the income approach, the comparable sales, as well as the replacement cost. They're going to look at all three of these numbers, either do a blend or an average, or just look at some method that the bank fits for their underwriting. Under the income approach, which is the most common, they're going to be analyzing and discounting all of the reported financials on the property. Therefore, the more that you can understand what the underwriting is, the more that you can find financing terms that are beneficial and supportive of your needs. Well, that's it. That wraps up this summary of commercial real estate, and I hope I've provided a little bit more insight into what is required in a commercial real estate transaction. If you're thinking about making your first investment, contact us today for a free consultation.